What's up, guys? This is obviously a very bloody day in crypto today. Let me go ahead and just try to explain what happened. So basically, the guy on the left, he's the CEO of FTX. He initially became rich doing statistical arbitrage. Basically, it's a way where hedge funds and banks basically get like a very high quality trade without any fear of liquidity issues, right? So then he basically became rich doing that, and then he fundraised a lot of money or whatever, and basically launched FTX, which is, you know, the brokerage, the cryptocurrency exchange, right? He also has something called Alameda. Alameda is a basically they invest in other companies, etc., etc. This idiot basically decided to over leverage himself on all of these different companies and basically tried to make them public on his exchange, right? And tried to basically prop up the price of all of them using the money that he made from his exchange and using his money that he made from, you know, his investments and stuff. So he propped up the price, similar to what the Fed is basically trying to do, except he's not the Fed, right? So this, you know, he really messed up big time, right? And then the guy on the right, this is the CEO of Binance. Binance just bought out the entirety of FTX. So that obviously caused a bit of a pump in the market, but then everything, you know, really started to cascade because currently people can't withdraw their funds from FTX, and Bitcoin, Ethereum, Solana, all of these like large coins are basically in free fall because there's a huge liquidation issue in the market at the moment, primarily caused by this guy and his team. So basically that's why we see the market falling like this. But the issue now is that we don't know how bad the figures actually are. All right, so they released some sort of numbers to us, right? But they're not, what they publicly released doesn't necessarily need to be the actual figures, right? So there can still be a much larger drop in the market. So it's sort of difficult to say how much lower the market can go. But of course, you know, we're sitting at around 18.5 on Bitcoin. Things are looking like they could end up falling lower. It's a bit risky to try to aggressively go long, obviously, on crypto, because there's still a lot that needs to even out in the crypto markets. All right, so there's that. Let's go ahead and now just talk about the stock market. All right, number one, very simply, we see the dollar is falling. That's why the market went a little higher today, right? We made a newer low on the dollar, but if we end up wicking here, holding this level as a low, basically the 109.50 level, this low of this candle right here on the daily, we can end up bouncing, and then this would cause the market to fall, right? And another thing that can cause that to happen is because the VIX is also seemed to bottom out. So it's going to be interesting to see what happens over the next few days. But of course, we got CPI data coming out on Thursday. Regardless of what happens, it's basically just not like a guarantee that we should continue falling. A lot can happen after CPI data. CPI data can be bullish, right? We can end up breaking above 390, hitting 393, 395, even 400, right? But then overall, I do think the market should fall. We're obviously closing very bullishly. We're obviously like closing above levels of resistance. The dollar is obviously falling. The bonds are obviously bottoming out. The bonds are another good indication that the market is showing some stability. The bonds didn't make a new low. They bounced, right? So obviously this is strong on the bonds. And we know that if the bonds are doing well, then the stock market also does well. And of course, we know that if the dollar is doing poorly, then the stock market is doing well. So 2 out of 2 things are basically doing well for the stock market. So technically, we should continue going up higher. But of course, CPI data comes, and we're going to get a better understanding of what the market direction is going to be, right? But overall, I still stand by this trade that we could end up getting a very, very big move to the downside. After, even if we do get an initial push to the upside with the CPI data, The Fed knew what the CPI data was prior to his statement last week when he was speaking. And of course, right now we are also basically like crossing above on the MACD very, very sharply here, right? But we didn't get a super aggressive move to the upside that coincides with the sharpness of this MACD indicator moving up. So that's a bit worrisome to me. But regardless, you know, 383 to 378, 379 level is going to be a bit of a range here. But regardless, what I was saying with the Fed was he basically already knew what the data was going to be. And he was very hawkish in terms of maintaining a very hawkish stance on interest rates. So he wasn't going to stop tapering back on interest rates. Ideally, most likely what's going to end up happening is we're going to get a push to the upside, which should cause a bounce in the bonds, and it should cause a bit of a fall, a continued fall in the dollar, right? And then that would give more weakness to the VIX, because we could clearly see that there's a lot more room to the downside on the VIX. But overall, I think the easiest trade, regardless, would be to get into puts for early next year, because that, you know, unless the Fed pivots or unless the Fed starts doing quantitative easing, the market should continue falling lower. What ends up happening is we continue to delude ourselves into thinking that, okay, this move to the upside is actually the real one. No, it's not. And then, oh, wait, no, this is actually going to be the, no, it's not. So then we end up deluding ourselves over and over. So I think, and we've been doing it for quite some time here. So it's interesting to see how easily people's biases change. And, it's important to realize that we can still continue falling lower, and the trajectory of the market overall is still bearish. The Fed is still sticking to its guns in terms of their overall bias, right? So we have to adhere to that. So basically, you can see that we just closed above 380 on the SPY, right? Essentially, we just need to see if it gets to 388, 390. At that point, that would be like a much better area to go short. But yeah, you could also go short after CPI data comes out, depending on how the data comes out. But yeah, I mean, regardless, I think things should continue falling lower in the market over the next few months. Tough to say what happens. Intraday, we were leading bullish. That worked out. So yeah, I mean, you could clearly see that today the tech stocks led the rally and the bounce today. The IWM obviously underperformed, and crude oil obviously did not do too well. So, what was interesting though is that gold and silver ended up doing pretty well today. So that was pretty interesting. But aside from that, you know, there's nothing really much else to look at. We could take a look at all of the we can take a look at all of these coins. They just got decimated. It doesn't even seem real at this point, like what is going on with price and everything, but they're just getting decimated at this point because of the insolvency issues with FTX. And yeah, we just we just have to see if the market can basically stabilize, and we can find some long opportunities on these cheap plays, and then we'll see. But aside from that, there's not much else to look at. I hope you guys had an amazing day. Make sure you like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.